Hey Slopers, Brian Johnson with thestockminer.com back with another quick video. I want to do this one on FAS. I will at times talk about FAS and will mention sometimes in comments and whatnot that the FAS is based off of the XLF and that the XLF is really only made up of about 13 banks, and of course that's followed by a deluge of emails to me about no, the FAS is based off of something else, and it's not based off of the XLF, and the XLF is made up of way more than 13 banks. And so I just want to go over a little bit about these particular ETFs and what I use and how I use to trade them, maybe clear up some of the confusion, and hopefully help you guys that trade and maybe even trade these particular ETFs. So the FAS is a Direxion 3 times ETF, and it supposedly moves 300% of the Russell 1000 Financial Services Index. And that is made up of apparently 1,000 different stocks, all weighted in a different way. But FAS is supposed to be based off of that and will move 300 times. It says right here 300% of the price performance of the Russell 1000. So if we flip over and look at the Russell 1000, you'll see that that stock ticker is actually IWB. So here is a chart of the IWB, which is apparently what the FAS is based off of. So now if we look at, keep this chart in mind, remember what it looks like. And as we switch over to FAS, you'll see that it looks more like this, which doesn't really look much like this. So here's FAS again. Now keep this chart in mind. And if we flip over and look at the XLF, you'll see that the XLF looks just like this. Well, isn't that strange? FAS, XLF. That's really weird. Those two charts look very similar. However, the XLF is supposed to be a spider based off of the S&P 500. Certainly not off of the Russell's 1000. Well, if we go back, I can just, I guess from my perspective, I'm looking at it from a chartist perspective. So what it's based off of makes no difference to me. All I know is that the XLF is very similar, if not exact, and it's not quite exact, but it's very similar to the FAS. So I will, of course, start my trades with the XLF. Why? Because it may not move quite as fast as the FAS does, but at the same time, while I might not make as much money, I'm certainly not going to lose as much money. And if I'm in a day trade where the risk to reward ratio isn't as great as I would like it to be, I will always trade the XLF because capital preservation is key in this trading arena. So I always like to look at this one first. If I see a very good trade, high risk to reward ratio, then maybe I will use the FAS for that particular trade. And it seems to work much better for me to base it off of this as it would be to look at the IWB and then try to base a trade off of what the IWB appears like it may or may not do. So we'll always start with the XLF. So when I say that the FAS is based off of the XLF, this is more of what I'm talking about. The charts are very, very similar. This should hopefully promote a lot of responses and replies in the comment section about why this is and how they work together, and that will be great. I don't want to go into that now, so I'm sure there are those of you that can help with that and why this all works the way it does. It's beyond the scope of this video and would take me longer than 10 minutes to do it. So the XLF now, if we break it down into banks and what it's based off, let's look at this. Here's a current list of the XLF and all of its holdings for this particular spider, and you can say JP Morgan at 12.4%. It's all weighted a little bit different, so not everything is equal weighted within this ETF. And as we move down the list, you can see, while I might comment and say it's made up of about 13 major banks, it's obviously not made up of 13 banks. But as we get down into the lower areas, you can see 0.3%, 0.4%, all the way down. But if we go back up here and look at the top, I can actually break this down a little bit further. You can see based off of this chart that the top 10 companies within the XLF make up 56% of its holdings. So if we take the top 13 to 15 banks, that's really about 60 or more percent are based off of these banks alone. So these, of course, are going to be the first banks, especially JP Morgan, Wells Fargo, Bank of America, and Goldman Sachs, that I will look at when also looking at particular trades in the XLF. It's very possible that if these top four, top five banks have a very bad day, it doesn't really matter what the other banks do. This particular index may end up break even and or even down for the day, while the rest of the banks may have had half decent days, only because of the way it's weighted. So I'm most concerned about these top five, top six banks and making sure that if I'm going to go long this ETF, I in particular want these six or so banks to be in more of a bullish setup than I would like to see them in a bearish setup. That, of course, only adds to the probabilities of a successful trade, which is obviously what this whole trading business is all about, stacking the odds in your favor. So, going back to this, when I look at my trades based off of the XLF, I will say that FAS is based off of the XLF for obvious reasons. The charts look the same. I don't care if the FAS is based off the Russell and the XLF is based off the S&P. I only care what the charts look like because that's what I'm basing my trades off of. And the XLF, it's important to me that the top 10 to 15 banks are in a more bullish setup rather than a bearish setup, because it'd be very hard for the index to make a move to the upside if those particular banks are in a bearish setup as opposed to a bullish setup. Keep those things in mind if you are a trader of the FAS or the FAZ, and it will only help stack the probabilities in your favor for a successful trade, which, as I've said before, is exactly what we're all here for. We're just stacking the odds in our favor in every way we know how. So for those of you that trade these, hopefully this is of use to you, and hopefully you can use this in your trading going forward. I'll be back with another video later on. Hope you guys enjoyed this one. Talk to you later. Bye.